President and CEO of AbraSilver, John Miniotis, joins me here again for an update. AbraSilver continues to advance, its Diablillos project in Argentina. Before I hand it over to John, let's just go through the disclaimers as always, right? Forward-looking statements are going to be made here today, blue sky discussions as well. Not investment advice, and please check full disclaimer in the YouTube notes. Before I do hand it over to John, though, he's been on here before, so I think that this is going to be tailored more as maybe of an update episode, assuming that you already know the story. Abra is a well-known name, well-known player in this space, right? Lots of success. So maybe not. I might give him, John, or I'll ask you, John, maybe just in 30 or 40 seconds, assuming there are maybe a handful of people that aren't familiar with you, maybe just walk us through what Abra is, and maybe more importantly, some of your recent milestones, of which there have been quite a few, right?
Perfect. Yeah, Matt, thanks very much for having me back on. I know it's certainly been a while, so absolutely happy to provide a quick high-level update, and then happy to get into a more interactive session with you here, answer any questions. But yeah, in terms of Abra, we're a high-growth silver and gold explorer. Our key project, Diablillos, is in the Salta province of Argentina, and we've rapidly grown this project over the last several years here. And so we've doubled the size of this project over the last 4 years or so. And so now we're sitting on quite an advanced stage project. We have about 120 million ounces of silver, 1.1 million ounces of gold. So it's 100% precious metals focused. Economics would be about 60% silver, 40% gold. So it's truly a primary silver project here. And back in March of this year, we announced quite a robust pre-feasibility study. And so very attractive economics on that. You can see there on your slide, on assuming very conservative commodity prices, $23.50 silver, $18.50 gold. So both of those well below spot prices today. This project has about a $700 million Canadian net present value, which on a per share basis translates to over $5 per share. We're trading about $2.30, $2.40 Canadian as we speak today. So at a deep discount to that underlying value in the pre-feasibility study. And of course, you can see the torque that this project offers. To closer to current spot prices, the net present value on a per share basis here is closer to $10 a share. And so we're trading at a very significant discount to that underlying value when you factor in current commodity prices. And what's important is that this project still has lots of exploration upside. And so we're now in the middle of a 20,000 meter drill campaign. We've announced some very successful results here over the last several weeks as well. And so, yeah, no, we're in a very good position, well funded. We have some very supportive strategic shareholders here. We're drilling, adding value, and advancing this project, which we expect to have a construction decision here within the next 2 years or so.
And yeah, it has been fun watching your story develop. Like I say, it's one of the kind of a winning story for sure over the past 3, 4, 5 years. And as you say, on the concept of torque, I think a lot of people, as we go into maybe a bull run here with precious metals, knock on wood sort of thing, people go to the marginal projects to find their torque. But here you are at current spot price, you're trading, the NPV, approaching $1 billion US, right? So not too shabby in terms of torque for even the high grade, high quality projects such as your own. Why don't we, I have a few topics I want to touch on here. I think, obviously chief among I want to talk about Kinross and the new stake there. You had a rollback, which you actually kind of successfully navigated. I wanted to kind of pick your brain on that one. But yeah, phase 4 drill campaign. Obviously, this is going to be the meat and potatoes of any conversation with Explorer or with a developer Explorer. 20,000 meters. About a quarter of that is going to porphyry and jasperite targets, and we'll talk about the porphyry on its own separately. Sure. Then the other 3/4, you're doing good things, right? This is like kind of that boring work that nevertheless has a huge impact on, the next economic update. You've got waste rock that's getting turned into ore grade, right? 33 meters of 87 grams per ton there. You're getting inferred, upgraded to indicated within the pit shell, which means it might be P&P at a future date, right? And then also potentially expanding the resource beyond the pit shell in some areas. I guess maybe, like I say, with that high level kind of squared away, maybe can you give us a more detailed update about where we are in terms of how many holes in are you, how many are left, and maybe like what target is actively being drilled presently?
Yep. Yeah, so in terms of our 20,000 meter drill program, really almost all of that is step out drilling. So the vast majority is on step-out drilling just outside of the main Oculto deposit, which is the main ore body. That's still open in several directions. To the northeast in particular, it's open. And there's also a high-grade zone within that Col Tesoro, which we're drilling as well. And so that could be expanding and upgrading resources. So that's one important sort of target that we're drilling. But for sure, the main target is expanding that very, very high-grade Jack deposit. So Jack is a southwest extension. You can see it there. That's what we discovered last year. So in 2023, we discovered this Jack zone, drilled about 20,000 meters there. So we drilled 110 or 112 holes in total on that Jack zone and announced a very robust resource. So the grades at Jack are over 200 grams per ton of silver, and that's all very shallow, close to surface, with a little bit of gold on top of that. So to put that in perspective, if you use a 70-to-1 silver to gold ratio, you're talking about 3 grams per ton on a gold equivalent basis, close to surface in oxides, open pitable, which could be easily processed through a cyanidation, agitated leaching process. So, this is a tremendous ore body. We recently discovered it after we completed 20,000 meters as part of our phase 3 drill program. We paused the drilling to announce a pre-feasibility study. We said, look, well, obviously we have a discovery here. It's not drilled off, but let's just put economics around this. And so that was an important milestone. We touched on that. We announced that in March. And then shortly thereafter in April, we did that strategic $20 million financing. $10 million was from Kinross, obviously one of the top 10 largest gold producers in the world, very well-known company. Importantly, that's their first equity investment into a company in Argentina. Obviously bodes well for Abra and for Argentina as well, clearly. And then the other $10 million was a company called Central Puerto, which is a very large-scale blue-chip utility company. In fact, they're the largest energy producer in Argentina. It's a New York Stock Exchange listed company, a multi-billion-dollar company. And importantly, this was their first ever investment into a mining company as well. And so, clearly it goes to show the quality of the project that we have is attracting various players that have, not really invested in projects before. And so Central Puerto is very, very strategic. So they're looking to supply additional power in Salta. We're surrounded by large mining projects. Obviously, all these projects require lots of energy. And so Central Puerto is looking to provide additional sort of energy in that region and could obviously be extremely valuable for us as we move this into a mine down the road. So excellent partnerships there. So we raised $20 million Canadian at a premium to the share price with no warrants. So excellent terms. And then that enabled us to continue drilling Jack. And so Jack is the main focus. We recently announced some more high-grade drill results. Even just a few weeks ago, we announced to the south a step-out hole encountered like 30 meters of over 270 grams per ton of silver. So, we were hoping that the silver continues. Honestly, we weren't expecting the grades to increase beyond 200 grams. I mean, it's, very, very positive for us that the grades are actually increasing beyond the high grades already identified. I mean, we're continuing to step out. At some stage, there's going to be margins here where we're going to reach sort of the limits of this deposit, but we're not there yet. So, we're very, very enthusiastic about the upcoming drill campaign, expanding Jack, expanding Oculto. And like you mentioned, we're doing some step-out targets separately as well, which we're drilling for the first time ever in the company's history. So exciting year for us.
Yeah, and you touched on a lot of things that I hope to kind of efficiently get to here, but let's keep on just the exploration here just for a little bit before we move on, because I do want to talk about Kinross and what's going on there, because that's obviously a large development. But maybe just, what do you think is left in your current campaign? Are you kind of halfway through the meterage, or what do you think in terms of that?
Yeah, we're expecting the campaign will go until about the end of January or so. And so there's still several months ahead. of us here. And so we expect to be having lots of announcements. I'd say on average, every 3 to maybe at most 4 weeks, we expect to be coming out with press releases.
Packages.
So right now we have, over, I'd say probably a dozen or so holes at the lab waiting for assay results. So as those start coming in, then we'll put out regular press release updates. And we continue to be drilling, of course, and sending new core to the lab. And so there's going to be a continuous stream of news flow here until Q1. And then on the back of that, again, next year, then we'll look to announce another, a feasibility study, actually. So we'll look to, upgrade the reserves and then announce sort of a bankable feasibility study next year.
And maybe kind of just a question around you've got your M&I, and then about 80% of that turns into reserves. Do you have an internal goal about? I mean, what's preventing? Is there an internal goal about upgrading more M&I to get it within the pit shell, or what's kind of holding back from getting more, P&P reserves proven up?
Yeah, so I'd say that's not a top priority right now at this stage. So with the Phase 4 drill program, and again, it is mostly step-out drilling. So we're looking to continue to grow the resource. I mean, we need to find the boundary at some stage. At some stage, again, Jack obviously doesn't go on forever. And so we're stepping out and just continue to grow the resource. And then you define that with infill drilling. So right now we're doing like 50-meter step-out holes and then continuing to step out until, obviously, we find the limits here. And then at some stage, you kind of narrow that down and infill drill that and try to bring that to an M&I and ultimately to a proven and probable reserve. And so, yeah, we'll see that later on. But for right now, it's really entirely focused on step out. And then, yeah, maybe early next year, if we want to do another drill campaign, we can focus specifically on infill drilling. But for us right now, the most exciting is, continue to grow the resource.
Yep.
Let's see how big this is. And then we can infill drill that to make sure that falls into the proven probable category that you can then put into a feasibility study.
Bank on it, yeah. So this next question, this is going to be of all the things, it's such a strong, obviously strong and remarkable project. I mean, good grade, like you say, super simple, super close to surface. So it feels a little bit, and I admit, kind of whinging over smaller details, trying to find a weakness, right? But so right now, strip ratio is, I think it's 6.4 over length of mine. It's actually only 4-1 for most of the years after that, but the first couple, I think it's 25, 26, 27, 28 to 1, something like that. I mean, obviously that's just the nature of the game with open pit. But is there a path forward to reduce that strip ratio, or are you pretty happy? Just, I mean, the economics are already so good. The mediocre strip ratio is already kind of overcome in terms of economics, or is that something you're still looking to fine tune, and how so?
Excellent question. So the strip ratio increased quite a bit and from the old PEA study. And what we did, we actually increased the cutoff grade. So we went from, historically, we were using a 30 gram per ton silver equivalent cutoff grade. Now we're using 45 grams per ton silver equivalent. And so that means anything below 45 grams per ton, we just treat it as waste for the study. And when you look at that, there's like 20, 30, 40 million tons of that material sitting close to surface at Oculto, which has good gold grades in it, 0.2, 0.3, even up to 0.4 grams per ton of gold. And for the purposes of this pre-feasibility study, we just assumed all of that is waste. And so you're mining that, putting it on a waste dump and not processing it, when in fact the optimal way you're moving that material anyways, you would likely put it on a heap leach pad and recover that gold. Obviously, you would have to build a heap leach pad, but we've run those numbers internally since the pre-feas has been completed. And it looks to obviously justify, and so that would materially decrease the strip ratio. If you assume there's 40 million tons of this, I mean, the entire resource right now is about 45 million tons. So that almost doubles the resource. Obviously,
Sure.
this is very, very low grade compared to the rest of the resource. But you have a low grade resource that could recover about 200,000 to 300,000 ounces of gold, I believe, over the life of mine.
Yeah,
So
not
it's
too
a material
shabby.
amount of gold. And that, once you incorporate that, the strip ratio goes well below 3-1. And so again, we're fine tuning those numbers. So these are just sort of ballpark numbers here. But that's one area that we can obviously continue to optimize. You'll see that likely incorporated into future studies as we continue to refine those. But yeah, we've done additional met test work on that low grade material. It recovers quite well, sort of average recoveries for that type of grade on a heap leach pad. So there's no issue there. So yeah, no, that's one area, and that could really also help lower the overall capital costs of
Yeah.
this project. So right now, if you're building a 9,000 ton per day plant, it's a large scale plant. You're producing a very, very high levels of silver. So especially in the early years, you'd be producing over 14 million ounces a year of silver here. So it's a world-class sort of project at that scale. But for a junior company, if you're looking to develop this yourself, you'd look to lower the initial capital cost. So you don't have to fund 400 million. And the way to do that would be to start off with a heap leach. So that low grade material, while it's lower grade, you could start off producing a heap leach, allows you to get some cash flow, get up and running, and then you can
Yeah.
look to expand through a 9,000 ton per day plant. So it gives us excellent optionality, not only reducing the strip ratio, reducing capital costs. So there are, various parallel paths that we're sort of evaluating here, but it's great to have that optionality for sure.
This is one. It's not on my script here, so I apologize. But when you talk about this, is a question. Does having that in your back pocket, the ability to go it alone in a realistic, feasible way, does that help with negotiations with M&A?
Absolutely, absolutely. There's no question about it. And so I think, yeah, we've seen that time and time again. I guess for a junior company, if you have a large project, that's obviously, what you want. But at some stage, if you're not able to raise, like in this case, even $400 million could be doable. It's not a multi-billion-dollar project.
Mm-hmm.
But in other cases, if you're a junior and you have a world-class project, but it's billions of dollars, I mean, then there's no feasible path forward for you to develop that. And you really run out of negotiating leverage when you're negotiating to be taken out. If there's only one party interested, you don't have multiple offers. I mean, you're either going to not build the project or you're going to sell it. And sometimes you can get taken advantage of. For us, we're not at all in that position. There's various opportunities. And again, we're evaluating those very closely. So look, this is one path forward. We can build it as it is in the pre-fees. We could build a heap leach. Obviously, we have strategic relationships with various parties. There's not just one party, but various parties that have expressed interest here. And so, you want to have all options on the table, whether it's build it or, obviously down the road, if we end up selling this project at a big premium, you want to have as many parties interested as possible, make it as competitive as possible. And I think that's the situation we're in, thankfully.
Yeah, a good problem to have when you're AbraSilver, eh? Let's just switch gears here. I think one of the ones that investors are excited by, and it's always that tantalizing desire for kind of new capital D discovery, but it's the porphyry, right? You have a porphyry complex that's been identified, northeast of your pre-existing Diablillos or Oculto pit. In previous conversations that you and I had, you'd intimated that wasn't really a priority, right? And it makes sense, right? Your explanation at that point made sense. You had so many targets to begin with. Why kind of go off script, right? And to chase something completely different, even if it is huge and potentially game changing, blah blah blah. And so previously in our conversations, this is something you had said maybe we weren't going to pursue. Now you start to see meterage dedicated to it in phase 4 here. Can you maybe the decision to pursue it, what changed your mind, or what was kind of internal discussions or rationale that prompted that change in mindset?
Yep. So there are actually multiple porphyries on this property. And so I think in our prior discussions, we were talking about sort of the copper potential beneath the existing pit. So beneath the Oculto, beneath Jack, as some of our drill intercepts, I mean, we've always been targeting the oxides, but we've drilled through the oxides into sort of deeper sulfide mineralization. And with some of those holes, we hit, there was an intercept, I'm trying to remember exactly the grades, but it was well north of 2% copper.
Mm-hmm.
It was maybe 3 grams per ton of gold, 300 grams of silver, and 2% copper over 40 meters. So like a phenomenal intercept into sulfides.
Mm-hmm.
And so, there was, several hits like that. I mean, that was the best one. But there were several hits where we hit 1, 2, 3% copper with good gold and silver grades. And so at that time, people were saying, well, why don't you keep drilling these deeper targets beneath Oculto? I mean, those are fantastic results. And those are fantastic results. Thing is, that will come into the mine plan after Oculto has been mined out. So you obviously start with the open pit. If we have a 15-year mine life right now, we're probably not going to get much value, even if there is a significant copper gold porphyry beneath this. If it's going to come into production 20 years from now, does it really make sense to be drilling that to a stage where you can actually announce a resource and do a study on that? I mean, there's a lot of money there, which we didn't have. And so we said our priority is the low-hanging fruit, which is the near-surface oxide mineralization. And so that's the one target. Again, we're not going to be drilling that but about 4 kilometers to the northeast, we have a series of outcropping porphyry mineralization there. And that seems to be quite a bit closer to surface. So we've never drilled there, but there has been historical drilling very shallow holes, just 200 meters. And this is like going back 30 years, like back in the 90s. So it's not recent drilling. But nonetheless, I mean, it hit copper, gold mineralization close to surface. And so we're doing detailed geophysics there right now. It's actually being completed. We expect to have those results from that study very shortly here, within the next couple weeks. And then we can start defining some specific drill targets there, where you could be looking to encounter a porphyry, which may be about 500 meters or so below surface. And so that's not too deep. I mean, if you get copper grades like we hit beneath Oculto near surface, that could be almost an entirely separate project for us. So you could have Oculto and Jack, and obviously you can start production there. And at the same time, in this new district, you could be drilling for large-scale porphyry mineralization, and that would require obviously different processing. It's sulfide, so you need a flotation plant. But that could really create excitement as we're progressing Diablillos right now towards a feasibility study and getting permits and looking to eventually start bringing that into production. If you have a separate area where you could be drilling and defining a new project, especially if it's going to be significantly bigger, that could really be beneficial for us. And so yeah, we've made the decision now with a $20 million investment. We have the funds. So it's time to drill that porphyry. And again, we're going to start off by drilling a few deep holes, maybe a handful of 500 to 700 meter deep holes. Let's see what those results come back with. And then, of course, if there's phenomenal results there, we could do like a whole detailed program there. But we'll assess that once we have those initial results in hand. So that's something totally new, very exciting for us. Our geos always wanted to drill that. I've always wanted to drill that. But we've always been quite conservative, managing our cash quite tightly. Let's just focus on, low-hanging fruit here. But now we can afford to, do some real sort of step-out drilling here and try to identify a whole new target here that's really hardly ever been tested.
So yeah, kind of simultaneously trying to defeat the Lassonde curve a little bit, so to speak, in terms of that orphan period, and then also proving that blue sky now that you do have that the kick in the pants that is Kinross coming on board, that blue sky of your whole property. No, fair enough. So why don't we talk Kinross briefly, right? So Kinross, Central Puerto, they each tossed in $10 million. Maybe just one question each, and we'll move on. But obviously everybody knows who Kinross is, right? They no introduction needed there. But you've actually formed a regional partnership with them to explore further opportunities. I guess maybe kind of a two-part question. One is just a general introduction. Any details you can provide? What stage is it at? When might we hear more news? But then maybe if I can ask a more pointed question afterwards is how does a partnership like that benefit a single project? A single project I know is a little bit. I mean, you have Coipita, you have lots of other ones, but Diablillos is your big one. How does that partnership benefit a devco like Abra that's solely dedicated to a single project like that?
Sure. Yeah, no. So there, as part of the financing, we signed obviously an agreement with Kinross, saying that for any new projects that we acquire in Argentina, they would have a right of first offer on acquiring a 50% stake in that project. So let's say we acquire a new project. We really like it. We do the due diligence. We would offer that to Kinross and saying, do you want to form a joint venture company? And so we could do this 50-50. And so there's mutual benefits there. So for Kinross, they don't have an office in Argentina. Obviously, we do. Our guys are very familiar with the country. we already know quite a few opportunities. So from their perspective, we're bringing opportunities to their attention. Obviously, if they like it, they can participate. If not, they wouldn't. And so it's an option for them. And for us, having major backing. I mean, for us, if we can partner with Kinross, they pay 50% of the proceeds, and we can then form a joint venture and obviously have their technical expertise help out and obviously fund 50% of any new projects that we're advancing could clearly be a huge benefit for us. So I really see that as a win-win. And so, we're still actively evaluating. There are quite a few opportunities. As you can imagine, we're extremely selective. When you have Diablillos already, the best project, I'd say, in Salta, not only in Salta, in Argentina, on the silver side, I'd say without question. And so, for us to buy something new, I mean, we evaluate things all the time, but it's a very high threshold. We don't want to now be diverting our attention to something that's not as attractive. So yeah, who knows? I mean, if an opportunity presents itself and it makes sense, then we can jointly act on that. But it's a great optionality to have, and it's of course always very beneficial for a junior having a partnership with a major because they bring technical expertise, financial strength, etc., and really helps validate a project. If our team likes it and their team likes it, I mean, now we feel very comfortable, advancing that. So yeah, no, we'll see. Again, we're monitoring a few things, but it doesn't necessarily mean anything will come out of that. But it's great to have that option available.
Awesome. So a couple more questions here, and maybe this one again. I kind of warned you there's going to be more of a couple of philosophical questions, so to speak, in this one. Reverse split in May. So this you announced a 5-1 rollback in May. Obviously, these can sometimes go over like a lead balloon, right, in terms of
Yeah.
juniors and the response to them. Yours even had the quote-unquote unfortunate timing of occurring on the back of a really nice surge in share price for Abra over that time period. And then my point to this is that you haven't really given much back. You've after that surge to have managed to trade sideways, even with the rollback and hold on to value. And I guess the question I have for you on this is, I mean, knowing that this is kind of a scourge of the junior market, that rollbacks can cause us more damage, is there any wisdom you can share about how that can be reduced, or is it just simply, is the answer go find a Diablillos and then that makes everything easier? Like, what's the
Yeah,
secret?
yeah, no, timing's everything, as they say. So timing's very, very important. And so that's something we've been wanting to do for years. So we've been holding off on that. And so initially, I mean, when I got involved with this company back in 2020, it was about $10 million market cap. But even at that time, we merged two companies together. We did not do a share rollback out of the gate. And we already had almost 300 million shares fully diluted for a small market cap company. So we started off with a very bloated share structure and obviously added value over time. And so, yeah, we decided this was the opportune time following Kinross, following the Central Porto investment. We were approaching 600 million shares outstanding. And so it's quite high for a junior. And so I think what's important is what the market really hates seeing is if you have a huge number of shares outstanding, you roll that back, and then immediately you're issuing new shares. And people are saying, well, okay, let's hold off here because they're going to dilute shareholders. For us, it was crystal clear to everyone that was not the situation. We're not rolling it back to start paying, again issuing new shares. So it's important to be fully financed, I'd say. When we're fully financed, we raised $20 million through strategics. We could have raised a lot more money if we opened that up. Obviously, we refused to do that to dilute. So there was a huge interest for a placement, which we did not take. And so for us, it was, look, we're rolling it back just to keep it tight. We're not doing this to issue new shares. And if you want to buy shares, go do it in the market. And so we knew we had that strong demand. There was institutional investors that were waiting for a financing. Once we announced there was no financing open to the general public, they again, if you want those shares, go buy them in the market. And that's obviously what ended up happening. And it's nice that silver started moving higher. I mean, silver made a low in February, and obviously sort of peaked in July here. And so it was good timing. And so we're happy just to clean up the structure. I mean, at the end of the day, the market cap's the same. So it's, 6 to 1, half dozen to the other. It doesn't really matter if you have 600 million shares or you have 100 million shares and, your market cap stays the same. But yeah, sometimes I think you want to avoid spooking the market, rolling back, immediately issuing equity, and then, that could create a downward spiral. I think for us, we did it from a position of strength. We didn't need to, but we knew, look, if we're going to do it, let's do it now, get it over with. And I think the market again just kind of ignored that and sees the value in our share price, no matter how many shares we have outstanding, because it's the market cap that matters at the end of the day.
Yeah, absolutely. No, it's the why and when matters. And one more question here, then I'll leave it off to you for final thoughts. But just on that note, I mean, you've been CEO of Abra since December 2019. It was trading at 30 cents, 10x from there. Here you are again. I mean, it's a very successful company, very successful project. Again, kind of a philosophical question for you. I mean, looking back in hindsight, what were the hallmarks of success that in Abra that were maybe visible early? If you're trying to, investors looking to learn from Abra as it is now and hopefully identify projects like it earlier, what were those telltale signs for you with this project that it could be something special?
Yeah, it's the project itself. I mean, when you're drilling step out holes, coming out consistently with world-class results, I think initially even people don't really value additional exploration upside, but it's clearly there. Like even we're in that exact same position today. I mean, when we're still like obviously we've grown the resource, the market cap has responded nicely, but as we talked about, the net present value on the reserve alone at current commodity prices is about $10 a share. We're trading at less than 250 a share, less than 25 cents on the dollar, and that ascribes zero value to additional upside potential. But just look at our press releases. I mean, there's huge upside potential. Jack is still open. We're hitting best grades ever, and we're stepping out. I mean, Oculto Northeast, we're hitting very good gold grades. And again, obviously, we're going to keep following those up. And then we have upside, which is the porphyry, which is highly speculative, but could be game-changing potential. So, there's a lot of upside not still being valued in us. And so that's been our story all along. I think a lot of investors realized that and said, look, we're paying nothing for the optionality here. So obviously, share price has done well, but we're still tremendously undervalued. And yeah, when you have a project like world-class projects, just keep delivering world-class results. Very few, far in between. I think we're very, very fortunate to have one of those. And so, yeah, you just keep drilling, obviously, until it doesn't make sense to drill any longer. But, I think that's all we're doing is drilling and especially being focused. You don't want to commit to a $30 million drill program when you're a smaller company, because obviously, if market conditions turn, even if the deposit's growing, if you're running out of cash and now needing to constantly finance, obviously you're not going to be in a good position. So it's a balance. You want to drill aggressively, but again, you want to be very cognizant. And so, yeah, I think we all have an entrepreneurial spirit. So we're looking at this cash like it's our own. If, I was personally, had this money myself, how much would I commit to drilling? And that's sort of the first question we always ask ourselves. And yeah, we feel very, very comfortable with the way we've been managing the budget and systematically growing this deposit over time.
No, excellent. Well, I think we'll call it here. And I'd asked you prior to us going live if there was anything I missed in our conversation passed through, and you mentioned you wanted to talk about jurisdiction. So maybe I'll just give you the microphone here, and this will be your final thoughts on the matter and just why maybe people are missing the bus in terms of the opportunity that Argentina is progressing or presenting to people right now.
Yeah. Yeah, and that's really a great way of characterizing it. I mean, on some, investor calls and interviews, people frequently ask me, well, what's the one thing that's misunderstood or, underappreciated? I'd say right now for us, it's the changes, the positive changes that have taken place in Argentina. This is, yeah, unprecedented. It's hard to overstate the importance of these positive changes that have been now fully implemented into law. So President Milei took over as president of the country back in December. So not even a year ago, he's already implemented this game-changing new investment regime. And so his whole mandate has been, let's reduce government spending. So take that down as quickly as possible. And let's incentivize private companies from investing in Argentina again. And so for, decades, Argentina has always been seen as, good geological potential, But the issue has always been there's a high tax burden, there's high export duties, there's foreign exchange restrictions. And so, sometimes you can overcome all of those and still end up producing. But it's always been quite a high hurdle. That's now flipped 180 degrees. So it's completely flipped. Now it's a very low tax jurisdiction. There are no export duties. There are no FX restrictions. You sign a 30-year tax stability agreement, and that's not being recognized by investors. And so have a look at Argentina. It's very, very different than, I think a lot of perceptions. And, tax rates now, if you're investing $200 million, tax rates are 25%. There are no export duties. There are no foreign exchange restrictions. And you lock in that tax rate for 30 years. So extremely competitive. And so now with the geological potential combined with that very favorable tax regime, that's why you're seeing companies like Kinross, companies like Teck, multiple companies, BHP is obviously investing in Argentina. Obviously, the corporates are well aware of that. I'd say the investors are not following this story very, very closely. And so there's an opportunity here for sure. You should absolutely be looking at Argentina closely. If there's a project where you can spend $200 million to build and to advance it, not just in mining, it's oil and gas, forestry, tourism, there's a whole bunch of industries. But yeah, if you're making large scale investments in Argentina, there's never been a better time in our lifetime to be making them right now. And so we're very fortunate as Diablillos is entering that construction decision stage. The investment regime is, much, much, much more favorable than it ever has been.
No, well said. I think so. Excellent project, improving jurisdiction, and maybe understated or misunderstood potential yet. John Miniotis of AbraSilver, thank you for your time, and we'll catch up again soon, I'm sure.
My pleasure. Thanks very much.